Hey everybody, how's it going? So I wanted to read you an article here that's fairly depressing, both for A, the complete lack of understanding based in the vocabulary of some of what's in the article, and B, the factual reality. It says U.S. consumer sentiment drops to 10-year low on inflation fears. U.S. consumer sentiment unexpectedly collapsed in early November as Americans grew increasingly concerned about rising prices and the inflationary impact on their finances. Now look at the word choice there. Unexpectedly collapsed. Unexpectedly. Can anybody here raise their hand if they are surprised at the fact that when you print trillions and trillions of dollars, combine that with shutting down businesses across the country, that this is going to cause some sort of situation in the future? Can't say exactly what, but cause some sort of disruption in society that's going to collapse people's consumer sentiment. I mean, like unexpected, my balls. I mean, like just you just see how homes are going up by hundreds of thousands of dollars. Everything is becoming more expensive, and it seems to coincide with printing insane amounts of money around the same time that everything was shut down. And it's like unexpectedly. I mean, there's lots of ways that you could describe this. There's lots of ways that you can discuss why things are happening the way they're happening. But to say it's unexpected to who? Anyway. The University of Michigan's preliminary sentiment index decreased to 66.8 from 71.7 in October. Data released Friday showed. The November figure trailed all projections in a Bloomberg survey of economists, which called for an increase to 72.5. Waning confidence reflects an escalating inflation rate and the growing belief among consumers that no effective policies have yet been developed to reduce the damage from surging inflation, Richard Curtin, director of the survey, said in a statement. And yes, that makes sense. There really are no policies in place that address it. There are just people saying, well, this policy won't cause it, or this is not really to contribute to it, or it's transitory, or it's not that bad. And then you just kind of have to look at what is actually happening. I mean, people will point to things like the stock market being at all-time highs, but that does not necessarily represent the underlying economy. I remember, again, Pepperidge Farm remembers back when candidate Trump would criticize Obama's economy, saying that the high stock prices and everything else were based on artificially low interest rates and it wasn't real, whereas President Trump would criticize the Fed intensely anytime they talked about hiking interest rates, even the tiniest bit. But yeah, you have record low interest rates combined with a lot of printing of money, and it just that does not seem to be something that is going to affect inflation in the manner that people really care about. I think that, again, they're not looking at the price of cheese at the grocery store, in spite of what the White House Twitter says. They're looking at what does it cost, what is the most expensive part of my life, my apartment or my home, what is that going to cost me? And there's really no policy whatsoever that is that is out right now that's going to provide any sort of immediate relief to the devaluation of the currency that people can see. Consumers expect inflation to rise 4.9% over the next year, the highest since 2008, the report showed. They expect prices will rise 2.9% over the next 5 to 10 years, unchanged from the previous month. I do not, again, who is expecting this rate? Again, like I'm not an economist, but nor are the people that I hang out with, admittedly, but they are not expecting 2.9%. 1 in 4 consumers cited inflationary reductions in their living standards in November, with lower income and older consumers voicing the greatest impact, Curtin said. Again, the people that live on fixed income are the people that are most screwed by inflation. There's the whole, negotiate for a raise from your employer. I mean, if you're retired, you don't have one. Surging costs for food, gas, and housing are eroding consumers' purchasing power despite stronger wage growth. About half of all families anticipate declines in inflation-adjusted incomes next year, according to the data. The sentiment figures follow government data earlier in the week that showed the highest annual inflation in 3 decades. Now, when it comes to things like gas, I mean, I expected this even last year. I remember reading the 10Ks and 10Qs from various energy companies where they said, listen, this is the very, very, very paraphrased low IQ, dumbass repairman version of it. But it pretty much said, we got raked over the coals last year. We're going to be focused not on CapEx, capital expenditure, which means finding new sites to drill so that we can get more oil, but rather let's milk what we have right now so that we can return as much value to shareholders and pay down debt. And since most oil companies were raked over the coals last year, regardless of the president, whether it was Trump or Biden, didn't really have much to do with it. It was mostly the decrease in energy demand as a result of COVID, less people driving and everything else. You had a lot of oil companies that lost an insane amount of money. So what are they going to be looking to do? Are they going to be looking to spend money so that oil can be cheaper, so that they can find more oil? No, they're going to take what they have, their existing investments, and milk them for all it's worth. This was something that even while Trump was president, you could predict, even if he did win re-election, that energy prices were going to go up as a result of OPEC cutting production considerably, OPEC bringing that production back online at a very slow and steady rate, and above all, the fact that there are many, many areas of the world where energy companies and oil companies are not really investing in capital expenditure, but rather just into paying down debt and their own net profit margins. And what's really interesting is when you look at some particular OPEC countries, one thing that I found interesting was that some of them were not actually bringing their production back online to even fulfill their quota. So I think they were increasing their quota like something like 400,000. Please correct me if I'm wrong. I'm not an oil magnate or anything, but it was like 400,000 barrels a month or something like that. And you had certain OPEC producer nations that were not even increasing their production in line with their own quota, which again is quite. That's not going to fare well for people's gas prices. When it comes to food and housing, again, housing prices have been going insane over the past 5 years. Some would argue 10 years, since we have interest rates at stupidly low levels, and interest rates that have been at stupidly low levels under Biden and admittedly Trump. And last year, just interest rate, when interest rates go, you could spend less money per month to purchase a larger home. Therefore, you have more money to put down on a home. Therefore, you can offer more money. Therefore, the pricing of the housing goes up. I find it interesting that a lot of people are blaming Biden for all of this, when in reality, a lot of this really kind of, like, the stage was set for this to happen while Trump was president, and it's just continuing as a clusterfuck with Biden as president, and will likely continue to be a greater clusterfuck for whoever comes in next, and the person at the helm will always be the one that's blamed for it, regardless of everything else. One of the reasons that I kind of like Ron Paul back in 2008 and 2012 is he would actually kind of discuss this stuff and give you an idea of, like, it was kind of like he would give you a little window into the future, and it's kind of sad to see that future kind of coming to be. While consumers are growing more distraught over inflation's impact on buying conditions, household spending showed signs of improving at the end of a soft quarter. Looking ahead, the risk is outsized. Persistent price rises feed into the consumer inflation psyche. Bloomberg economist Eliza Winger said in a note, "In the near term, shortages in prices should restrain inflation-adjusted spending." So in the near term, hey, listen, I know the good news, that one thing that's going to restrain people from spending is that there's shortages and prices that are going up. So the good news is that the prices can only go up so much because there's going to be shortages of the actual goods that you want. That's good news. Political impact. President Joe Biden said in a statement earlier this week that addressing rising inflation is a top priority for him as he faces declining approval ratings. The Michigan figures showed a deep divide along partisan lines. Sentiment among Republicans plunged 17 points, the lowest on the record, while for Democrats it slipped 5.3 points. The Michigan report showed buying conditions for household goods deteriorated supply, with a gauge falling to a reading of 78. That was the second lowest in data back to 1978. There were more frequent mentions in the survey of higher costs for vehicles, durable goods, and homes. 24% of households expect to be worse off in the coming year, the highest since June 2008. I really do wonder if it's only 24%. Well, one thing that's interesting is if you look at the amount of people that rent in the United States and the percentage of households that said they'd be worse off, it almost kind of overlaps to an extent. You know, if you already own where you live, you may not think you're going to be that much worse off. If you don't, you might feel a little fucked right now, and that sucks. The gauge of current conditions dropped to 73.2, the lowest since 2011. A measure of future expectations decreased to 62.8, which was the weakest since 2013, according to the survey. Americans are also more pessimistic about the economy's prospects over the coming 5 years. The university's gauge fell to the lowest since 2011. I don't blame people that are pessimistic about the future outcome. I am not super optimistic about the future outcome. Again, when it comes to predictions, I don't know what the F I'm talking about. I always manage to predict things wrong. I started a supply company because I thought repair companies that were small were all going to go out of business in 2011. I remember when the iPhone came out, I thought, a phone without a keyboard, nobody's going to buy this shit. So when it comes to predictions, I'm really not the person to talk to. But this is a prediction that I think is well-founded by most ordinary people. Again, they see an issue. inflation going insane. They look to their government who's reporting it. They'll say it's transitory. They'll post percentages that really have very little to do with the biggest expenses in their lives, which are things like housing. They don't really see policies being discussed that are going to make things better. They see things, certain social spending that may deal with the symptom, but that don't actually deal with the underlying problem, much of which is the devaluation of the currency. So, it's helpful if you have social spending that deals with the symptom, but again, there really is that underlying cause, which is that, again, if you just look at a graph of housing prices over the past 5 or 8 years, is just let me know what you think in the comments down below. Are you a person that has confidence that in the next several years the economy is going to get much better? Do you think that your economic life is going to get much better over the next several years? Or do you think that things will continue to get worse and worse and worse? And do you feel this little kind of weird feeling of rot and despair in the pit of your stomach? I am usually a happy dude. Again, I curse a lot. I'll yell and blah and rawr, as Eli likes to say. Rawr! Eli's been rawring a lot lately. I hope it helps him fund Silicon Dojo. But for the most part, I'm kind of a happy guy. But that doesn't mean that I don't feel that like little pit of despair and right over here. And it's really, really weird. It's just strange because in 2009, I was actually way worse off than I was now. Like, very few people knew what my business was. I lived week to week, not even month to month or paycheck to paycheck, like literally week to week. But I had a sense of optimism for the future that I honestly don't have now. Again, I have way more savings right now. I have way more notoriety right now. I have more income streams right now than I did 12 years ago. But and again, maybe it's irrational. Maybe it's just completely irrational, asinine emotions. But I had a better 5-year outlook for myself in 2009 when I was broke and just kind of starting the building blocks of this business than I do right now. I don't know if it's because my expectations have shifted. I don't know if it's because the fact that I'm 32, I'm about to turn 33 next week, rather than, versus being 20 years old, 20 to 33, maybe I'm expecting more out of life. Maybe I'm kind of looking closer into retirement in a way that I wasn't facing, like just getting older or middle age back then. But I have less optimism now than I did in 2009 and 10. And, a lot of it just has to do with that feeling that things back then, as shitty as they were, you were kind of on the cusp of it getting better. And now I just kind of feel like things are on that cusp of just getting worse. Even if I have a better position on that ride, even if I'm in even if I'm in a nicer seat, even if I'm in a nicer train car, it's really about where that train car is going. And it doesn't, again, right now, like back then, I kind of felt like I had a shitty, broken down economy seat on the, on the ride up. And now I just kind of feel like I have a first class seat on the ride down. Yeah, I think that pretty much puts it. I think right now I'm kind of closer to, again, I have a company that's established, more income streams, more savings. But at the end of the day, I just kind of feel like I have a first class seat on the ride down. And I'd much rather have an economy seat on the ride up than a first class seat on the ride down. But let me know what you think in the comments down below. Again, what do you think of your economic prospects over the next several years? What do you think of this article? What do you think in terms of what can be done to fix this? And do you think it can be fixed? That's it for today. And as always, I hope you learned something. By the way, something you may notice, Mr. Clinton has been trying to keep me from getting up out of the chair when I sit down and do these videos. One of the ways he does it, he doesn't just sleep on my hand, but he actually takes his paw and he hooks it around my arm so that if I just lift it like this, see this? He's completely hooked around my arm. If I wanted to get up right now, I would not be able to. I could use all of my force and I would not be able to get up off of this chair because Mr. Clinton doesn't want me to. And if Mr. Clinton doesn't want me to, then I won't. See you all in the next video. Bye now.